life as a part-time college instructor. Let's go! Good morning, students. Good morning, Teacher Ed. Our lesson for today will be about financial auditing. Can someone from the class share his or her idea or prior knowledge about what financial auditing is? Okay, let's hear from Ms. Gabuya.
As you may already know, this assessment uses financial statements to provide information about the financial statements to stakeholders. To enhance the accuracy of the financial statements, that's when the financial auditing should come in. Financial audits conducted by a qualified third party, by which is the auditor, enhance the confidence of the business financial statements and identify areas where accounting process could be improved.
Is that all? Okay, thank you. Looks like Ms. Gabuya here already did her advanced study because what she said last was absolutely correct. Financial auditing is an objective evaluation of a company's financial statements. They are usually conducted on an annual basis. While financial audits can be conducted internally, most of the time, stakeholders will want an audit from an independent body, just like what Ms. Gabuya said. Ultimately, the aim of a financial audit is to ensure that the financial records are an accurate representation of the organization's financial performance. Now, to give you a clear overview of the lesson, I want you to watch this video. Make sure you listen and you take notes as well because I will be giving you a short quiz, just a very short quiz next meeting, okay? So, let's watch this video.
When most people think of an audit, they imagine IRS agents arriving unannounced, calculators in hand, ready to go through boxes of invoices, receipts, and notes.
That's certainly one type of an audit, but it's not the only kind.
Most of the audits that Big Four firms do have nothing to do with tax day.
And none of them are unannounced. Publicly traded companies are required by the Securities and Exchange Commission to validate their financial positions with an audit. And although they're not legally required to, privately held companies often perform audits at the request of banks, investors, and other key stakeholders.
Their goal? To assure investors and other stakeholders that their cash flows, balance sheets, and profit and loss statements aren't materially misstated.
Firms like KPMG are often hired to perform these audits because they can provide an independent review of how a company operates.
And whether public or private, companies that go through an audit have the opportunity to gain valuable insight into how their business is performing.
So that's why companies perform audits. But what is an audit engagement like?
The word audit means to evaluate. So you could say auditors are the ones who evaluate where money's coming from, where it's going, and what it's doing each step of the way.
Accounts receivables, vendors' fees, acquisitions, operating expenses, there are a lot of channels that money can flow through. And the bigger the organization, the more accounts there are to follow.
Which is why a career in audit can be so dynamic, especially in this global economy. Now, take a typical audit team, say for a multi-billion-dollar company. Now, to serve a client like this, there may be multiple partners working in multiple locations around the world. There may be managers, senior associates, and associates working in multiple time zones. There may even be specialists from tax or advisory practice offering their expertise on everything from tax compliance to IT controls testing.
Senior members provide leadership and direction, but there's a fair amount of autonomy, so each team member should be capable of self-management.
Of course, communication skills are essential. But in order to really excel at being an auditor, you need to be able to think critically, to understand what business decisions drive the transactions you're auditing.
Why does this transaction benefit the company?
And how does it fit in the company's strategy? Auditors who understand motivations for each transaction bring the right level of professional skepticism to the project, which is important because it's our job to look at the financial statements and see what companies say and verify that it's correct.
Or not.
an audit engagement can take anywhere from a few months to a full year, depending on the size of the client and the complexity of the project.
Unlike advisory, where most of our clients are engaged on a project-by-project basis, most of our audit clients are annuity clients, meaning we work with them year after year.
In fact, we spend so much time at our client sites that some of us even set up permanent workstations at their offices.
While we're there, we spend a lot of time poring over their documents and drinking their coffee.
We compare the documents the company uses in their day-to-day operations against what they've recorded in their financial statements.
For example, we might take the receivables a company plans to report and compare them with actual orders that customers have placed.
We may also contact vendors to ensure that the numbers listed in the purchase orders are accurate.
Hi. Yeah, can we go ahead and send confirms to the vendor?
We then take that information and compare it with the information companies are required to report in their SEC filing. And then we state our opinion as to the accuracy of those statements in our audit report.
Have you ever wondered what an auditor does? Their work is largely in the background, but it's really important in maintaining trust and confidence in our public sector. Every public organisation, such as government agencies, councils, schools, district health boards, and the military, has a particular job to do and is funded to do it. That money comes mainly from the taxes and rates that New Zealanders pay. The main way we get to know what an organisation has done each year with its money and other resources is to read its annual report. How can we know whether we can trust what it tells us in that annual report? That's where the audit comes in. An auditor will check the information in the annual report. They're trained to make judgments. The auditor will learn enough about how the organisation works to decide on the most important information to look at. Usually, that means looking at where the most money gets spent. But the auditor will also look at what we call sensitive expenditure, the controls over the spending that might be seen as having a personal benefit. The auditor will take a number in the financial statements and track it right back, testing where that number came from and how it was arrived at, including any systems, judgments, and evidence that support it, so that any of us reading the annual report can rely on that information. This is called providing assurance. Someone totally independent, the auditor, is given confidence in the information that the organisation is reporting in its annual report. Auditors often also look at information describing what the organisation has done with the money it was given. They check that the organisation's reporting on its performance can be relied on. In the public sector, the audit can focus on the performance information as well as the financial statements, and it's a really important independent check on the information that's been reported. It helps New Zealanders have trust and confidence in the services that we're paying for through our taxes and our rates. Auditors also help the organisation by highlighting where to make improvements.